Hello traders, Gary Wagner here, just about 11:15 in Honolulu, 5:15 in New York. It is the last day of the month, October 31st, 2017, and this is the Daily Report for Gold and Silver. We did have gold and silver trading lower on the day after seeing 2 days, Friday and Monday, of course, of higher pricing. Gold closed down almost $6 on the day, $5.90 to settle at $12.7180. Silver down 13 cents to settle at $16.71, and that was all with a slightly unchanged US dollar, 94.45. So traders, as we go into the final trading day of October, we will see both gold and silver close under moderate pressure. Gold closing down about $6 on the day, $12.7160. That is our current print. The key right now is whether or not gold pricing can hold what I believe is a very critical support level down at $12.63. The low today in gold came in at around $12.68, so it came in well above that price point, but we did see gold close with not only a lower high, but also a lower low than the previous day. And as you can see, when we look at the activity over the last 3 days, today's action certainly has given back about 70% of the gains witnessed on Friday as well as Monday. The reason I believe that this area of current support is so critical is that it still holds into play the potential for a bullish model, although we've certainly not witnessed it since we've seen this most recent decline from about 1309 down to 1263, or the yearly high that we've achieved at 1363, in which that market gave back roughly 61% of the gains achieved in the largest rally of the year, which really began July 10th and concluded in September and totaled $163 approximately of net gains. So this area is critical. If it does not hold, my sense is that we have seen some pretty deep retracements in the market, and the only logical place to look for if gold starts to trade under pressure is to break to as low as the 78% retracement, and that comes in at approximately 1238. Traders, in as much as we have been flat with no active trades, I am still going to have a neutral stance, believing that we could see this market either trade sideways or potentially lower, in as much as today's trade activity did not have any follow-through from the most recent buying that was exhibited both Monday and Friday. The other thing that we certainly want to watch very carefully is we will have a statement released from the Federal Open Market Committee. It began today. It will conclude tomorrow. Although there are no live speeches or question and answer sessions, there will be a statement released, and traders as well as market participants will look at any information that comes out of that through a magnifying glass, and it could have a dramatic effect on current gold pricing. And traders, truly today's selling pressure was a net result of traders bidding down gold as opposed to a strong US dollar. Now, the dollar index was in effect today. I'll pull up the Kitco Gold Index. When we do, you will see the net effect of what we saw today. In as much as gold traded, this is of course spot gold, under pressure today, down $5.40. Only 50 cents of that was due to a strengthening US dollar. The dollar is trading at 94.43. It's down 24 points on the day, but as you can see, it is a green candle with approximately $5, $4.90 being directly attributable to sellers in the market. And traders, lastly, I do want to take a look at silver. Silver is also trading lower on the day, currently off about 14 cents, 13.7, trading at 16.71. and the area of support that we wanted to see silver hold was the 50% retracement, and it is a pretty long retracement. It is from the same beginning point and ending point as we had in gold. However, silver moved from approximately $15 up to $18 on a percentage move. It was a much larger gain than we witnessed at gold, and therefore the retracement was also much stronger, this being the 61% retracement here. But as you can see, we are currently looking at our 50% retracement as an area that we would want to see turn into support rather than resistance. We're currently tracking just below that price point. So therefore, we will remain flat or neutral in both gold and silver, awaiting some sort of positive fundamental news and a subsequent technical bounce. Traders, yesterday I talked about a real potential for a double bottom. The rationale behind that was both Friday and Monday's trading activity did result in higher pricing in both gold and silver. However, today we saw most of the gains from those 2 days erode very, very quickly. The concern right now is who will be the next Fed chair, and I think that that is weighing heavily on traders' minds, along with the fact that the FOMC meeting began today and will conclude tomorrow. I think the dust will settle throughout the end of the week, and we'll see if, in fact, these recent lows at 1263 hold. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.